Raghuram Rajan is speaking.
I'll ask you a little bit about the Indian economy because it's due to outpace China this year, growing about 7.6%, similar to last year. But international investors have structural reforms, mounting debt problems in the banking space, and the potential for more outflows if the Federal Reserve lifts interest rates again this year. What are you most concerned about that could derail the Indian growth story?
Well, I think we're a recovering economy, and when you talked about structural reforms, we've seen some actually play out over the last few days. For example, we have a bankruptcy bill which was legislated by Parliament just last week. We have a monetary policy committee which completes the monetary framework that was also legislated last week. So I think structural reforms are happening, are on their way, and growth steadily is, you're seeing more green shoots. Of course, it's not unmitigated. There is some bad news also every once in a while, but broadly we're getting stronger. Now, on the bad debts of the banks, we're cleaning them up. They're in the process of recognizing some of the bad assets, putting them back on track. So my guess is this is a process, but we will get through it, and the banks will be ready to fund growth in not so long a while.
One commentator described the toxic pile as potentially about $170 billion, the size of New Zealand's economy. Do you have a banking crisis on your hands?
I don't think so. First, I don't think this problem is that big. Second, many of the bad assets, not all, but many of the bad assets are in public sector banks where the government fully guarantees them. So there's absolutely no chance that they will fail. There's absolutely no chance we'll have a Lehman moment. It's really a question of ensuring that the assets are cleaned up, that investors have a good idea of the balance sheets of those banks, and that process is well underway. Some banks, in fact, have cleaned up much faster than the pace that we had set for them, and I think this is a good process.
Can we just draw another distinction for our US audience about the difference between subprime and what you're facing? A lot of tycoons, the big industry, were lent money through connections, family connections, friends, through these big public entities. How does that alter the cleanup task that you're facing versus what the US went through?
Right. Well, first, ours is not a retail problem. Ours is a wholesale problem. There are big projects, and a number of these big projects, it wasn't because of connected lending or corruption. It was because the world changed. They were set up with fairly high levels of leverage at a time when things looked really good. Previous power projects, for example, had been brought in on time with moderate levels of leverage. So with all the optimism that surrounded the world in 2007, 2008, people decided to go with more leverage into areas where they thought it would look like the last time. They would be able to deliver. And then the economy slowed, the world slowed. We saw even government decision-making slow, and as a result, costs went up for some of these projects, and what was earlier viable became unviable. So they have stopped paying. Now, what we need to do is restructure the debt for some of these projects, put them back on track. It's not that there are acres of real estate which are unoccupiable. It's actually a power plant which can produce power, and India is a growing economy which needs power. We just need to make sure that the debt levels are appropriate.
Should you privatize some of the banks if you had an answer to shareholders instead of taxpayers? Would that reduce some of the inefficiencies in the banking system?
I think over time, as we improve the governance in the banking system, that question can be addressed. I think at this point, the real issue is for most of these banks, clean up your balance sheet, because it's hard to imagine a private investor coming in without clean balance sheets. But also, I think many of them have the capacity to sustain existence as a public sector entity, provided we improve governance. Now, we have a bank board bureau which has been set up primarily to distance itself from the government and to make a number of governance decisions, including appointments for the banks. So my sense is we can do a lot without actually going to the point of privatization. That's a decision the government will have to take down the line.
Governor, let me ask you about monetary policy, because I spent a bit of time with your finance minister, Jaitley, last week, and he was saying he was attempting to firewall the Indian economy from some of the external strains. You cut rates in April to 6.5%. Would it help firewall the Indian economy if you took rates even lower from this setting?
Well, there's always two sides to interest rate cuts, right? I mean, some people could argue that you firewall less if you cut substantially. Some would make the argument that you're making. But I think the real way we're trying to firewall the economy is on the first hand with good policies, including, as I said, the moves on reforms that have been enacted recently. The second is by trying to increase the maturity of our debt, so that we don't have this phenomenon of short-term debt running, which happened in our last experience in 2013. We have substantially increased the maturity of debt, external debt that we owe. And the third is we've built up reserves. We have nearly $360 to $63 billion worth of reserves.
It's only 16% of GDP, though, isn't it?
It's much larger than it was earlier. It's pretty much a reasonable number for us to deal with many. It's not our first line of defense. The first line of defense is good policies. So you have to look at India and say, where else will I go? And I think if you ask that question, many people would say probably not a lot other places.
You've been on the record being fairly critical about central bank policy, and you've been calling for more global coordination. Some of us wondered whether that had hit home with the Fed and also with the BOJ. Both have been more reluctant to tinker with monetary policy, the Fed holding off on rate hikes, the BOJ more reluctant to wade deeper into negative territory. Do you think, or would you classify what we're seeing right now as coordinated central bank policy?
I don't think, that I asked specifically for coordination, in the sense of some other central bank governor calling me up and saying, is this okay? No, that was not the intent. The intent was we have to create a framework of what is allowable and what is not allowable in terms of policies. And policies that have large adverse spillover effects for other countries should be considered with great caution. And so I've been calling more for rules of the game in deciding monetary policy. It can't be what's good for me, I'm going to do, regardless of what the effects on the rest of the world are. I think central bankers are having a real healthy dialogue on these kinds of issues. How far is somebody supposed to go or is allowed to go? What kinds of policies are okay and what kinds of policies are not? So this kind of discussion, there's a healthy discussion about all this, and I think it does have some impact on what decisions are finally made.
Do you think the Fed should hold off on lifting rates?
I think the Fed can make its decision. I think it's been fairly transparent in how it proposes to do that. Far be it for me to tell them what to do.
There's a